Welcome to our channel, Stock Market Analyst. Today, we're diving into the basics of analyzing earnings reports to make better stock picks. By the end of this video, you'll have a clear understanding of what earnings reports are, how to read them, and how to use this information to make informed investment decisions. Don't forget to like, subscribe, and hit the bell icon for more investing tips. What are earnings reports? Let's start with the basics. Earnings reports are financial statements released by publicly traded companies every quarter. These reports provide a snapshot of the company's financial performance, including revenue, expenses, profits, and other key metrics. Investors use earnings reports to assess the company's health and make informed decisions about buying or selling stocks. Key components of an earnings report. Earnings reports typically include several key components. 1. Income statement. This statement shows the company's revenue, expenses, and net income over a specific period. Key sections to focus on include revenue, total income generated from sales, cost of goods sold, COGS, direct costs associated with producing goods, gross profit, revenue minus COGS, operating expenses, costs related to running the business, net income, profit after all expenses are deducted. 2. Balance sheet. This statement provides a snapshot of the company's financial position at a specific point in time. Key sections to focus on include assets, what the company owns, e.g., cash, inventory, property. Liabilities, what the company owes, e.g., debt, accounts payable. Shareholders' equity, the residual value after liabilities are subtracted from assets. 3. Cash flow statement. This statement shows the inflows and outflows of cash during a specific period. Key sections to focus on include operating activities, cash generated from core business operations. Investing activities, cash used for investments in assets. Financing activities, cash flows related to borrowing and repaying debt, issuing shares, and paying dividends. 4. Earnings per share, EPS. This metric shows the portion of a company's profit allocated to each outstanding share of common stock. It's a key indicator of a company's profitability. 5. Guidance. Companies often provide forward-looking statements or guidance, which include their expectations for future performance. This can include revenue projections, earnings estimates, and other key metrics. How to read an earnings report. Reading an earnings report can seem daunting, but it's easier if you break it down into steps. 1. Start with the income statement. Look at the company's revenue, expenses, and net income. Compare these figures to previous quarters to identify trends. 2. Examine the balance sheet. Check the company's assets, liabilities, and shareholders' equity. A strong balance sheet with more assets than liabilities indicate a healthy financial position. 3. Analyze the cash flow statement. Focus on the operating cash flow to understand how well the company generates cash from its core operations. Positive cash flow from operations is a good sign of financial health. 4. Review earnings per share, EPS. Look at the EPS to assess the company's profitability on a per-share basis. Compare the EPS to previous quarters and industry peers. 5. Consider the guidance. Pay attention to the company's forward-looking statements and guidance. This can provide insights into the company's future growth prospects and potential challenges. Key metrics to focus on. When analyzing an earnings report, focus on these key metrics. 1. Revenue growth. Indicates demand for the company's products and services. Look for consistent revenue growth over multiple quarters. 2. Gross margin. Measures the company's profitability after accounting for the cost of goods sold. A higher gross margin indicates better efficiency and profitability. 3. Operating margin. Measures the company's profitability after accounting for operating expenses. A higher operating margin indicates better cost management. 4. Net income. Shows the company's overall profitability. Look for consistent net income growth over multiple quarters. 5. Earnings per share, EPS. Reflects the company's profitability on a per-share basis. Compare the EPS to previous quarters and industry peers. 6. Free cash flow. Measures the cash generated by the company after accounting for capital expenditures. Positive free cash flow indicates strong cash generating capabilities. Practical example. Let's look at a practical example. Here's an earnings report from Apple, ticker symbol AAPL. Notice how we analyze the income statement to understand the company's revenue growth and net income. We examine the balance sheet to assess the company's financial stability, and we analyze the cash flow statement to evaluate its cash-generating capabilities. By focusing on key metrics like revenue growth, gross margin, operating margin, net income, EPS, and free cash flow, we can make more informed investment decisions. Common pitfalls to avoid. While analyzing earnings reports, be aware of common pitfalls. 1. Ignoring one-time items. One-time items, such as asset sales or restructuring charges, can distort the company's financial performance. Focus on the company's core operations. 2. Overlooking guidance. Forward-looking statements and guidance provide valuable insights into the company's future prospects. 3. Focusing only on EPS. While EPS is important, it's just one metric. Consider other key metrics, such as revenue growth, margins, and cash flow. 4. Not comparing to industry peers. Compare the company's performance to its industry peers to get a better understanding of its relative strength. To sum up, analyzing earnings reports is crucial for making better stock picks. By understanding the key components of an earnings report, focusing on important metrics, and avoiding common pitfalls, you can make more informed investment decisions. Remember to compare the company's performance to previous quarters and industry peers for a comprehensive analysis. That's a wrap on our guide to analyzing earnings reports for better stock picks. If you found this video helpful, please give it a thumbs up, subscribe to our channel, and share it with your friends. Have any questions or topics you'd like us to cover? Drop them in the comments below. Happy investing!